Emotional
Hey, what's going on,
damage.
guys? Oh, things got a little crazy there for a second. What is going on, guys? Zimster here with a few stock ideas. I wanted to share some of my picks, just in case, like, the economists are worried about the economy, the US economy leading into a recession. So I'm trying to find some recession-proof stocks, or just stocks that have really good balance sheets that even if there was a recession, they'll do just fine. They might decrease in value, but a lot of them are divvy stocks, so you just collect on divvies. So why the hell not? So I want to jump into a few of them and see, if you guys have any questions about any stocks, feel free to throw the tickers into the chat. I'm happy to look at them, consider them if they're buys, holds, or sells. I've been doing this over a year now, and I'm getting a lot better at it. And how much money I'm making off my plays now goes to show that I'm actually doing something right. So let's just jump into what's going on with the market right now. So right now we are seeing, we're gonna check out SPY really quick. Now there was a really nice push today in the pre-market. Once CPI came out, people are like, okay, this is lower than expected. Maybe we'll see some lower interest rates. Maybe. It's not even a for sure thing, but people are holding on to any good news right now and running with it, because the market's just been on a downturn for, oh god, forever now, for the last year. And we're near the lows, and a lot of people are looking for that buy opportunity. So, like, where is that buy opportunity? Is it now? Is it next year? So really, I'm just gonna show you a few different things that I'm looking at. So on SPY, we're reaching right now. Let's look at the day chart really quick. So we were into like a nice little uptrend here. We went as low as 347 around October, mid-October, and we had a nice push until about the end of October, beginning of November. Then we had a slide. This big slide was from the Federal Reserve announcing their approach to the upcoming interest hikes, and they went 75 basis points, and they mentioned that they might not be done after the December interest rate hikes, to be determined, which drove fear into the markets and just fucking, it sold off. So it sold off here about, let's see here, sold off about 5% or so, and then we started to get a little rally coming back here. So there's definitely some upward momentum. You can see here there's a little bit of upward momentum, and we got a huge spike today in the pre-market, and it's been running ever since. It's sliding a little bit. Its highs were 392. You're gonna get pullbacks. So one thing to understand is you want pullbacks. If you want the market to go up, you want small pullbacks, just because that creates opportunities for buyers to come back in. If it goes straight up, there's a problem there, because like, you're getting your huge buy opportunity, right? Like, it's driving, they're building up momentum. But the problem that you're going to see is a lot of people are going to take profits, especially in this bear market. Since we're still in a bear market, always expect for there to be some kind of sell-off after a huge run. So for example, let's look 2 days ago. What was this? Tuesday is a great example. This was November 8th. Now we had a huge run, well, not huge, but a good run. About 1.3% SPY, and then it was, kind of consolidated right here, and then it dropped a lot, and that was just because people don't want to stay in the market. There's not enough news to keep them in the market, so it just sold off. So That's something a lot of people are afraid of. So like where it is right now, you see this trend. We had a nice buy up in a pre-market. Now what we're seeing is we have a little bit of an uptrend here, right? We have an uptrend. Got a little bit of an uptrend going. Now this is actually a very solid uptrend. And the reason why is because every time it gets bought up, it sells off a little bit. Then when it buys up, it sells off, buys up. It's kind of holding this level up here right now. It's consolidating up here. Now, looking at this consolidation right here, what would your play be? Honestly, I wouldn't even take a play. But if you had to take a play on when it's consolidating up here, what could that mean? What could that mean? Could it mean that people are getting ready to sell off? Could it mean that it's gonna do a small sell off and keep going? You really don't know. You really don't know unless there's a piece of news. You don't know. The way I like to protect myself is when you're playing the market, I wouldn't necessarily play calls to a certain point and then play puts. What I would do is have the mentality of either you expect the market to go up or down. Now you have all these markers indicating like price points and like your supply and demand points. So these lines across, you know, at 393 we should see a little bit of a sell-off, or it should push right through if there's enough buyers. So what we're looking at is we're not really at any specific level. So honestly, what I would do is see if this sells off a little bit and then buy another call. You don't want to try to play both sides. That's where you're going to get burned. I mean, sometimes people do it very well, but honestly, we're not robots. There's so much price action movement from bots that just, you know, buy and sell constantly. You're not going to be able to win that war. So the best thing to do is just have the mentality of what you want to see in the market. So if you're expecting the market to go up, just buy a call and hold it. Even if the market sells off, hold on to your conviction. If you have enough information mentally and you're prepared for it to slide a little bit, don't just sell as soon as it starts selling off. Like, I get people are like, oh, put your trail stop in. Of course, you know, but if you're long, like if you're like 30 days out on a call, you don't necessarily need to sell once it's down. So here's an example of how I actually profited from being down $200, and then I ended up making $300 because it went up to $600 on my calls. So what I ended up doing here on Tuesday, I saw this run right here. And I knew there was probably going to be some selling off. I bought into this run somewhere near what was it? No, it wasn't that high. It was like right here. I bought in at like 382. I knew there was going to be a sell-off, but I expected upside from CPI. So yeah, I took yeah, definitely, Archie. So we're talking about SPY right now, and so my big thing is hold on to your convictions. Like, if you're committing to an upside, then commit to the upside. If you're committing to the downside, commit to the downside. Of course, after a few days of seeing it just keep sliding, and after news like it's still sliding, then yeah, you sell for a loss. Yeah, you're gonna sell for a big loss. You can limit those losses with stop losses, of course, but if you're long and you have the conviction like this market's gonna go up, like you have not just a feeling, it's based off news, it's based off financials, it's based off technicals. Like, you need to base it off a lot of different things. Don't just settle. Don't just settle for like, oh, it sold off, I'm selling. And that's where a lot of people lose money, because they keep taking these trades and like they instantly don't see the payout. Now, you're not always going to see instant payout. You're not always going to call the top. You're not always going to call the bottom. You can be complete opposite too. But since I held from Tuesday my calls, because I knew, well, like I felt that I knew that CPI was going to come in lower, and it did. So I was right. Like, and that comes from experience. You're not going to just get that from just guessing. Like, I went by how many layoffs there were, how good divvy stocks are doing right now. I judge a lot of things off divvy stocks too, because divvy stocks hold their own quite a bit even in a down market. And if divvy stocks are really diving, then you know you're in a pretty rough environment. But if they aren't selling off and it's only like tech and like big growth stocks and value stocks sliding that don't have dividends or just don't have good earnings, people are going to get out of those first. Like things that don't have good earnings and good balance sheets, people are going to sell those first. Those are going to go first. So any companies that are newer, like for example, a company that necessarily doesn't have a great balance sheet, but I'm keeping an eye on, is CrowdStrike. Now CrowdStrike, here, I'm going to show you. I'm going to show you something. Now this is their balance sheet. This is their income statement. This is how you can look at a stock and understand how they're doing. Oh, dumping money in the market. I'll tell you in a second. I'm going to show you something right now that's going to change the way you look at stocks. You should always be looking at these. You should always be looking at these. And how do you understand these? How do you understand income statements? How do you understand balance sheets? Okay, so for the income statement, you're going to look at how they've been performing. So they always show you a year and like another quarter. So you can make a judgment call from last year to this year. Now for CrowdStrike, they're not profitable. They're not a profitable company, but they are a huge company. Well, they're a big company and they see a lot of revenue, but somehow they can't grow profit. So there's issues in management. Obviously the financial managers can't solve their expenses are just too high. They either need to lay off people or they need to find better ways of investing their money to create better returns and create more profit. So this company has been showing a lot of potential, but their liabilities is more than half of what they make, and that is not something I don't want to invest in something like that. I want liabilities below 50%. Liabilities need to be below 50% for me to want to invest in you. Unless you're a new company, I get it. New companies, yes, but for established companies that have very high liabilities, that means they're just paying out too much. They're paying too much for their products or for contracts, whatever. They're just paying too much, and they haven't sustained a good growth method without causing their liabilities to keep going up. They need to find a way to cut liabilities. So their debt to assets is 70%. So 70% of their assets is debt, if that makes any sense. So you got to pay attention to this stuff, and this is going to indicate which stocks are going to take off faster than others. This stock is going to do fine because they still have a lot more assets than liabilities, but they're not profitable. And I'm not going to invest in this company until I start seeing them turn towards a more profitable pattern. So these are very important to look at. And this isn't a dividend company, so it doesn't hold as well, but it does move a lot. It moves a lot. I remember this was up to, let's look at the day chart. This was up to like $200. Yeah, this thing has been sliding. So right here you can see this thing slid from almost $300 and now it is a $134 stock. Now people are gonna look at that and be like, oh man, that's such a great investment. Is it though? Is it a good investment? I necessarily don't think so. I don't think it's a horrible investment, but I don't think it's a great investment. I think they're somewhere in the middle. They do show growth, which is good, but they haven't found a way to lower their liabilities. You want to see them lower those liabilities. That is very important. Now I'm going to show you a company that I would want to invest in, like a company that has great a dividend, that has really good earnings, and also has a really good balance sheet. So off the top of my head, I know Refi is one. I've been investing in this for a little bit now. I've been investing in this in all these lows. Now look what it's starting to do. As soon as we have a really green day, what happened? A really green day, what do we see here? A huge gain. And this is a dividend stock. Dividend stocks don't move like this. Not usually. And they have a really good dividend. 47 cents per share, and it's only almost $16 now. So I hope that can get through your guys' head. Like, when you're looking at stocks, don't just look at how much it was and then how much it is now. Look at what it's doing. Look at his profitability. Look at his balance sheet. I know not everyone's accountants or like have gone through accounting courses in college or anything like that, but these are very important things to understand about stocks before you invest in them. And I only invest in stocks that are either starting to turn a profit or look like they're going to turn a profit, or they have really low liabilities. If they have really low liabilities, that means they can start increasing their profit margins by a lot because they don't have huge liabilities. All they have to do is increase their revenues. They just work on their sales. But when you have too much liabilities and your sales are kind of iffy, there's just not enough driving home there for me, because I don't see the potential. I just see it just being a sideways stock. Of course, it's going to see some upside in the up market. Yeah, of course. But like, you want to find stocks that you can hold for a long time. And this is one of them. This is one of them. I bought a bunch of this at $14. A bunch of it. Now it's at 16. And here, I'm going to show you the difference. Look at this. Look at the profitability margin. Look at the profit margin. 62.9%. Huge profit margin. This means they're going to have money to invest in new things, new innovations, new ideas, new technology, whatever they want to work on. They're going to have a nice cash flow. And then you have your liabilities. It's almost below 20%. That's huge. That's huge. You want to see that. You don't want them to have like no liabilities. You want some liabilities. But yeah, even with these tough market conditions, they're doing great. So this is actually just one of the stocks I recommend. Refi, it's the Chicago Atlantic Real Estate Finance. They are rated very high, obviously right here. They are doing very well. Yeah, they're showing the 1 year price to $20. So I'm just gonna keep buying this. This is a great one. Do you guys have any stocks you want to look at? Any specific stocks? Because I'm happy to go over any. I mean, grabbing it now is not horrible. Right now, it's not horrible. I bought it a little bit cheaper because I saw the potential, and now it's showing the potential. It might pull back a little bit. That could be a good time to buy. Or honestly, I think it's still a buy because it's not even near its prior highs of 16. It also just matters on what the market does. There's no certainty in the market right now. And a few other ones that are, here's my holdings. I actually made a, where are you? A lot of stock streamers don't show you what they're invested in, and I don't know why. I guess they don't want people copying, but I don't really care. Oh, here you go, my stocks. All right, so here's all my stocks right here. This is everything I'm holding right now. I'm holding Volta because I have strong belief in Volta in the next 10 years. When EV starts taking off more so than it has, Volta has a lot of potential. And my buy target for this is $1 or less. Like anything less than $1, I'm buying it up. I buy like 10 shares here or there. Once I make some profits off some plays, I'll just take some of those profits and put it into Volta. Even though this has been sliding, like I know it doesn't look good. But here's what I'm looking at. A year ago, they had about less than 10 million in revenue. Then they went to 12. And then they went back. And now they're at 15. And now they're looking at maybe closer to 14. So this is a growth stock. ESNY, I got my Astora up. Let me see. ESNY. Ooh. This is newer. That's a new, yeah, it's brand new. Just came out, huh? A few years ago? A year ago? 2 years ago. They had a little bit of a run. They're not really showing their earnings. They're showing their reported. They showed reported here, 467 million. But they reported negative on earnings here, and this is when you started seeing a little bit of a downturn. This is probably what caused it to start falling. Let's take a look at the financials. Oh, oh, look at this. This actually isn't horrible. See, this is something I would look at. Like right now that it's showing a profit, well, a net income, that's actually not bad. It's not negative on its net income, which is good. And it has low liabilities, and it has 800 million in assets. It could be a buy now. I wouldn't mind buying some of this right now. If this can keep the same pattern of showing net income, it doesn't have profit margin because I guess it's not selling projects. It's not selling anything quite yet. Maybe these are orders. Ulster Automotive Holding. What is this? Manufacturing sale of luxury electrical vehicles. The company was founded in September. Okay, so they're gonna compete with like luxury EVs, which who'd be their competitor? Yeah, who would be their competitor is what I'm curious about. I would want to look at their competitor. They're owned by Volvo. Okay, that's not bad. I now watch it sit in the cellar at 4. They put out 50K cars this year. Factory built in the US will roll out another. Porsche. Okay. You want to compete with Porsche. Did Porsche do an IPO yet? Porsche is supposed to do an IPO. But look, here's something to look at. Now, look on the technical side. This is your downtrend from right here. I mean, I'm going to go with this because they match up a little bit more. I see this one right here, but like I'm not going to count that because it's sold off anyways. Yeah, it went up there and then sold off. So I'm just going to take the average there and come down. This is more of your downtrend. And I always put red for your downtrend because it means that you might want to sell when it gets close to the downtrend. That's why I always put red. Now, what we're seeing here is there's no technical uptrend yet. Like there's a small one, very small uptrend here. But what I'm seeing right here, this is consolidation. This means buyers and sellers are willing to buy it at this level. And that's a good sign. That's a good sign. This could get some momentum and break out. You do have earnings coming up. So it looks like they're waiting to see where the earnings is at. So last one was 467 reported. I would wait for these earnings and then see how they perform. Is that today? No, it's tomorrow. They're gonna show earnings tomorrow. I would wait tomorrow, and if the earnings are close, they don't necessarily have to beat. It has to be, but they have to show that they're increasing. As long as they're increasing from this 467, that could be a buy signal right there. That can definitely be a buy signal. Yeah, I would keep an eye on this right here. And if I were you, if they do well on these earnings, I would buy some more. I mean, I actually might buy some. That's actually not a bad. I like the financials here, but they're not driving profits or anything yet. So I want to see this more. There's just not enough information. But they weren't negative on net income, which is good. But they might be negative this time around because if they're making more investments, they're gonna need more capital, which is gonna increase liabilities. So we're gonna have to see where that lies. I would like to see what their liabilities are on this next earnings. If it increases a shit ton, it means that they took out a lot of loans to build plants and whatnot, which isn't bad. It's not a bad thing, but you want to catch it when it starts going down because it could just keep increasing and they keep spending. But we want to start seeing some of that profitability from the spending. They have to, I mean, they're making money as you can see, but I want to, these earnings are going to be very important for this company. So that's something I would keep a very close eye on. If they're showing growth, that's very important, but doesn't necessarily mean this is going to go up. Does not mean that. You just got to keep a close eye on it. And the 1 year price target is $10, but it's not, yeah, it's not, this is why these technicals and everything aren't giving you enough. It just doesn't show the potential yet. There's just nothing to go off of yet. You might be you were a little early. You were a little early for this, but that's fine. That's fine. You can buy it while it's low. I would try to average down a little bit, but I would wait for these earnings. If these earnings are good, I could see a little jump here. Maybe just a little bit though, not much. Okay, 11. That's not bad. That's not bad. This thing could become a $100 stock one day. It just might take a little while. EV's just been dropped a lot. All right, let's see what else is going up big today. Soxel. Soxel is your 3 times leveraged semiconductor ETF. Now this broke out today. A lot of stuff is breaking out today, which is really good. You can see the downtrend here, and it broke out right here, which is really good. I haven't bought more because I want to see us stay in a bull market, but I don't know how long we'll stay in a, well, we're in a bear market, but we're having a bear run right now. I don't know how long we're gonna have a bear run for this, so I just wouldn't want to buy more quite yet. Something I did buy more of today was BPT, just because this thing's kind of lagging around in this range, but it definitely hasn't broke past its uptrend. Should actually be more like right here. It has not broke past its uptrend, so I bought some more while it's low because I see this thing's gonna do well. And here's why. Look at these financials. This thing has almost 100% profit margin and has very low liabilities. This thing is going to be a money maker for a while, and I think a lot of people will notice that. It's had a decent uptrend lately, and I think it's coming back. It's definitely coming back with a nice uptrend. So I want to see how this does. This is going to be an investment for like, I don't know, 10 years. I want to see where this thing goes. Any other stocks you're looking at here? What else am I looking at? Fuel cell is actually something I personally want to invest in. I think there's a huge growth opportunity here. Now, fuel cell is development, design, production, construction, servicing high temperature fuel cells for clean electric power generation. Now, if this technology can keep being implemented and they innovate newer ideas for it, I can see this becoming a very important technology in the future. So this is something I invested in personally just because I believe in it. You're gonna have those. Also, they have very low liabilities again, which is very important. So that's something I looked at for fuel cell. It's been bouncing around this like 2 to 3 range for a while, and I've just been buying little bits of it in here. It has a little bit of an uptrend, but the reason why it's seen so much love is probably because there was some kind of news. Also, it's a green stock. A lot of people want to invest in green stocks. That's going to become a huge trend for the next 10, 15 years. I mean, it was a big trend a while ago, but there's a lot more newer technologies coming out. So I'm looking for those technologies that I think are going to be the game changers, and I think this company is on the right track. So this is just something I'm holding for a while. If you want to check another EV maker, oh, Fisker, yeah, I got Fisker too. I don't own Fisker, but I look at Fisker. I've played it before. I spelled that wrong? Oh, FSR. Yeah. Fisker's another good one. Don't they do, aren't they working on vans? Don't. Who is it that got the deal with Amazon? Canoe? If I have their ocean car on pre-order, it's definitely a good vehicle if they come through. Well, oh yeah, that could be cool. No, I have looked at this one. This is another one. They're just not showing enough growth yet. I'm being patient on this one. I don't think this one's necessarily out of the downtrend quite yet. I think it might take a little bit longer, but who knows? I could be 100% wrong. They're showing some sales, which is good. Let's look at their financials. So this is what scares me. They must be doing a lot of investing. They have a lot of liabilities still, which they're not that high on liabilities, which is good. They're just not below the 50% mark I would like to see them at. They were about a year ago. That's why they were. All right, so this is all right. So if we look at a year ago, I bet you they were seeing a lot of green. So 1, 2, 3, 4, 5. Yep. So you saw a lot of uptrends here because they were lowering their liabilities. They were below 50%. So you saw investment here. But then it started down ticking because their liabilities kept increasing, which makes sense. All companies' liabilities went up, like everything. Like it doesn't matter because the costs to everything have gone up. Some companies haven't increased their costs to their liabilities, and that's their own fault. That's their financial managers not doing things correctly for the company. They're afraid they're gonna lose customers. With Magma to make Magma makes BMWs and other high-end cars, so they don't own that factory. Oh, well, it's cool if they can rent a factory to make their cars, so they don't have to make that huge investment right away, which would be cool. That's actually smart. That's what a lot of newer restaurant ideas. They'll start online first before opening a storefront, and see if there's interest in their food before they do that. It's just a much better way to gauge your demand. You can gauge demand right away because you can rent a kitchen, make your product or food, whatever it may be, and see how well it sells, and then create an idea of how much you will need to sell to run a place. Like you can get much better financial input right away. Assume the big downtrend is when they invested in the Ohio factory. Yep, that's probably when their liabilities went up. That's probably what happened. That's one thing you'll notice, like when companies are making huge investments into building something. A good one would be Intel. They started talking about somewhere in here, probably about a year or so ago. They started talking about building a huge new semiconductor factory in Ohio, and I think it was Columbus. And investors knew, like, oh, they might start missing on these earnings, or they're gonna see some negative growth. So what ended up happening is they did start seeing revenue changes, but what really drove them down was the downtrend to their revenue. They're talking about expanding, but their revenue was lowering, so that drove it down. And they did miss big here, which drove it quite a bit more down. Yeah, semiconductors have just been kind of lackluster lately, but we're starting to see an uptrend right here. And guess who invested in Intel at $24? This guy. That was a huge buy for me. I was happy about that. I was like, once I saw these earnings, where was it? There's earnings here. They dropped. Well, I bought a little bit before, and I think I bought some more, maybe around like 26. But yeah, Intel is a long for me. I think they're gonna start doing good things. Plus, the government is fucking helping them out big time. Biden is all over Intel's nuts. Or Intel's overbuying, so it's one or the other. Are they buy now or what? Since they're a nice divvy stock, I would say they're a buy now. I would say they're a buy now. Their financials are pretty good. That's one thing I always look at. I would say AMD's is better though. AMD's financials are a little bit better, but they don't have as much revenue. So we're starting to see the limits to AMD and Intel's reach in the markets. And Intel's still almost double. I think almost double AMD. Now it's all about if AMD can start stealing. No, actually, yeah, they're more than double. They're almost 3 times. Intel's still about like 3 times bigger than AMD, but AMD has come a long way, very long way. I still think AMD might be a little too expensive for my taste. Like I would buy AMD at $50. It also matters on their market cap, but they have really good liability aspects here. Like their growth is pretty huge. Their assets has grown a ton. I mean, they went from 12.4 to 66. So right here, so Q4 of 21. Let's see here. What's the date on that? Q4. Let's take a look. Q4. So 1, 2, 4. Q4. Right here. This is when you saw that huge growth. Right here. So before they hit that huge growth, you saw it jump all the way up to 163, and then it starts selling off because obviously the market starts selling off early, or well, at the end of the year, they start selling off. So this is why you start seeing downtrends. But as soon as people saw that their revenue, let's see it, yeah, their revenue didn't increase crazy amount. They had AMD is a tough one. It's hard to gauge because it matters on how much of the market they can take from Intel. Apple makes chips now. TSM, Taiwan. So, but yeah, I would still say Intel's the better buy right now. I think it's oversold by a lot more. AMD is still kind of, I would like to see AMD hit like 50, and then I would buy a shit ton. But yeah, I gotta go to class. But yeah, this is my ideas in the markets right now. I'm gonna try to do more videos on the market. My next plays right now is I want to see what's gonna happen with the triple Qs. This is your innovation tech ETF. I'm watching this. I'm making plays on this. So I want to see what this does next. I think it's going to 280, but it could have some pullback. So I'm waiting for that pullback so I can buy another call and watch it run. But yeah, thanks for hanging out, Archie. I make sure to join my Discord because I talk about stocks all the time in there. Jump in there, dude, because I talk about this stuff all the time. And yeah, I haven't seen you forever, man. I hope you're doing well. And let's talk more. I'm definitely down to talk more. I'll do some more videos soon. I've been wanting to do more videos. I've just been busy with school. I've had a few papers I had to write, and I did a presentation today, so I've just been swamped. But I'm gonna try to get back to my little videos and talk about my thoughts and where I see things going. And hey, let's make some money. Let's make money. But yeah, dude, I'll join, but I never. Oh, okay, that's cool, dude. Whatever works. Catch me on the next stream, dude. I'll try to stream again. Maybe, what's today, Thursday? Maybe I'll do another one tomorrow. We'll see. Maybe I'll do an early one tomorrow when the market's open and kind of talk about plays I'm going for. We'll see. Yeah, let's get witch. All right, bro, I'm getting out of here. Thank you guys for watching, and as always, be safe. Try not to lose money. All right, guys, I'm out. Take care. Have a good one.